Okay, recording this video Monday 24th of March 2014. It's 3:03 p.m. Chicago time. Just getting this out before we close the day. Hope you had a good day's trading. So a nice fast kind of sell-off in the morning. Then we kind of took our while about bottoming, and then a little bit of recovery in the afternoon. Interesting day, about 1.6 million contracts traded. Go through a couple of things on the charts. I want to talk about kind of behavior and jaggedy patterns, because you don't get straight lines in markets when you're talking about human behavior. But before I do that, I just want to refer to the dollar index chart. So I briefly referred this on Sunday's video, just talking about what had happened to the dollar index and the commitment of traders. So this is the daily and the weekly chart. This is kind of big picture looking at the currencies. And dollar index was falling nicely into a downtrend. We broke support on the daily chart here at kind of 80.50, around there, and we're falling into a downtrend. And because we've not seen exhaustion patterns on at least on the daily time frame, this downtrend is going to continue. But then FOMC came out last week, and we had this really big couple of days in the dollar index, and I was like, what is that about? It's like, why are we being, showing such strength in the dollar index? We were hitting around cyclical support on the weekly chart, so you'd expect some kind of resistance there. But nicely today, we've kind of fallen off, and all the other currencies are rallying. Actually, one of the strongest of the lot is the Aussie dollar, which kind of surprises me because it's tied to China, it's tied to resources. Not sure why that currency in particular. Maybe they think the interest rates are going to start to hold or rise in Australia, but it is what it is. But because we're below support on the daily time frame, and we've not seen exhaustion selling on a left shoulder, at least on the daily time frame, this is in a downtrend. But what's interesting to me, and I was talking about this in kind of the weeks leading up to this, that the dollar index commitment of traders was kind of stubbornly holding above the zero line, and what I wanted to see to show professional support for a continuation of the downtrend, break 79s, was that the professionals would kind of turn against the dollar index, and that's what happened with the weekend's results on dollar index. So there we go, we've kind of gone negative here, which supports a downtrend in dollar index. You can see the bearish divergence patterns kind of come in here. So that's kind of good. It freaked me out for a couple of days, and I was thinking, have I got this totally wrong? But I do think we're going to crack through 79s now because of that pattern, and we got the professionals kind of pointed in the right direction. Anyway, so there we go, just a little thing on dollar index. Now, long-term charts just show you the 40,500 tip bar chart. So this is really interesting. So we had our big rally up to break to new highs, and we've had exhaustion patterns, and this is where we kind of fell off. And I was hoping at this point here that we'd continue this downtrend, big blue professional bar through support, get this thing going to the downside. We had all these kind of Ukraine, Crimea news events that kind of come in. We rallied from this one, and then we rallied from this one again. I think both of these were kind of news driven. This one with a flush pattern. But the last move up into these highs, where we're testing this kind of 1880 type level, we couldn't get through it. Cyclical resistance gets hit. We don't even overshoot a little bit. Overshoots show that the market is still strong. Here's an overshoot of resistance. The market's strong because it's overshot that resistance, where it's bounced straight off support. Bang. We overshoot resistance, but this one we couldn't overshoot resistance. So it's showing the first kind of sign of weakness. We get exhaustion up there as well, and now today's activity, bang, we're heading down towards this kind of area of we bounced off a previous support, got an exhaustion pattern on the downside. But blue professional bars coming in at the end of the day, they didn't pick it up on the lows necessarily there, so cracking below there puts this in jeopardy. And I read this as, as we're going up through these highs, we had to make our exhaustion buy, and then we kind of fall off. This is last roll of the dice up here. I'd have liked to see more blue professional bars up at the highs here in the 1870s, but that's kind of the last chance, and this is showing the strength of the selling going down there. So we've gotten held up temporarily on this support area at 1840, but because the blue professional bar is kind of sitting there, if we break the lows of that blue professional bar and then start heading through 1840, this is potentially going to turn into a downtrend move on the 40,500 tip bar chart. It's been messy, it's taken a long time to kind of turn around, but that's what I'm looking for. Interestingly, so support on a high time frame and the low time frame compared to the 40,500 tip bar chart is 4,500. So 4 times 5,000 times 3 is 13,000 times 3 is 40,000. So, and the reason I go for this time frame as my highest is there's a technical limitation within TradeStation. I think it's 90,000 tip bar chart, and this chart takes long enough to load anyway. So support, cyclical support here, synced up nicely with end of trend on the 4,500 tip bar chart. So that's a nice kind of pattern where you get trend moves in lower time frames syncing up with higher time frames. Now, so that's just big picture. What I want to talk about is psychology of markets and jaggedy patterns, because human behavior does not roll around in kind of neat rounding patterns. It tends to be extreme emotions that kind of draw changes. So 13,500 tip bar chart here. This is the decline that we've had, and we're in a downtrend on this time frame because we're below support here. Going to make pullback to end of trend. But you can see this is the exhaustion cell kind of getting this move going through that support area. Kind of comes back in with another pattern here. Pro signal exit, blue professional bars coming at those lows. Get a bullish divergence kind of coming out. It's just sitting there behind that pro signal exit. A couple of bullish divergence patterns kind of come in there as we round out here. So you're thinking, look, that's all kind of good. Exhaustion, bullish divergence, first bullish divergence, and then some more bullish divergence. That shows a nice kind of bottoming pattern. I would say wait for price confirmation as well. So we're going to make pullback to end of trend on this time frame. But this is what I want to show you. You'll see this in a whole bunch of time frames. And as I'm looking at this chart, we really see it here as well. Exhaustion, bullish divergence, these little divergence patterns. It's a straight line. The market does not like straight lines. It doesn't like kind of rounding out in terms of people changing behavior gradually and then all kind of moving to the other side of the boat. What you get is shocks. And what I look for when you get kind of straight lines like this in better momentum is the next kind of shock down. We know there's going to be a sell down kind of bar here in the next 4 or 5 bars or something like that. Something deep like this. Does it end up being a flush pattern? Not quite as deep as the exhaustion or whatever, but I'm looking for these straight lines to be jaggedy, to be broken by jagged edges. Market does not like this. It goes to extremes, and another kind of jagged edge kind of push down will be another kind of extreme selling event that'll take us to wherever. Let's see if 1840 holds and we go pull back to end of trend in this time frame, and that becomes an area of support for a while. But so look for these patterns, and then with today's activity on the 1500 tip bar chart and yesterday's activity, I've just pulled up a few examples. So exhaustion, bullish divergence, another first bullish divergence, then another bullish divergence. They're lining up in a straight line. Market doesn't like that. Bang, jaggedy pattern here. So we go down to a flush pattern, kind of like that. With whoops, gone the wrong way. With this kind of little pattern at the beginning of the day here as we sold off. Exhaustion, first bullish divergence kind of comes in. Even with a little pattern like that, expect a little jaggedy move down. It's pushed down. It's not a flush pattern, but it's a little another divergence pattern kind of comes in. And that kind of shows that kind of selling through this little sequence here. And then with this kind of pattern here, where we kind of fell into a downtrend, same thing. Exhaustion, first bullish divergence, another bullish divergence. There, and it's lining up with a straight line. You're like, oh, it's rolling around, it's rolling around. No, wait for that jaggedy pattern. So I don't know what to call this. Jaggedy pattern is what kind of goes through my head, but there we go. Bang, pushes down into another extreme kind of sell event that takes us to pro signal exit, blue professional bars kind of coming in there, and that's the start of the bottoming process. We actually needed the 4,500 tip bar chart to run to this time frame because we were in a trend move on this time frame as well to pull back to end of trend. And on the 1500, we started to put in those kind of things on the left shoulder. Here's the first one, pro signal exit, blue professional bars, a whole bunch of them, bullish divergence. Then the next move down, another extreme event, just a couple of points further, but look at all these blue professional bars kind of coming. And then right at the lows, we get Rambo patterns. We get a little bit of a Rambo to Rambo channel. They push it down again into extreme kind of territory here. The whole bunch of blue professional bars kind of come in and they pick it up. It's kind of after the window for a reversal for me, 11 a.m. Wasn't looking at the market at the time, but we kind of did have a little bit of a correction, but it's fairly weak. So that's what I want to show you. Just remember this when you're looking at your charts. If you see these things kind of lining up, expect because the human behavior is not rounded. It doesn't run in kind of straight lines. It runs with kind of extreme events. The best trade today was this short falling through the ice. On the all three time frames, we had cyclical support coming in here, the high 50s. So cyclical support on the 1500 tip bar chart, on the 45, exactly the same here, and it was also on the 500 tip bar chart. I'm not sure if I can go back on this quickly. Let's see. Here we go. So that was the breakdown there. Sorry. Yeah, it was actually the second one. So we'd had a nice kind of trending move here, but the 56 kind of around here. Now, this was actually, if you're looking at the average trade size, that was extremely high average trade size. You can see it's a blue professional bar, extremely high average trade size. It was almost double what it had been, kind of all morning. And we wanted to hold at that point. We were starting to put in some blue professional bars at the lows and so on, but we weren't holding. And so when you get a break, look for the doubles and the triples. When we're lining up with these time frames, because they become either areas of support or areas where we break down into trend. Which way they go depends on the momentum, bullish and bearish kind of momentum patterns, and have we done enough bottoming activity in order to really create a support area here that we're going to bounce from. And we hadn't, and that I was looking at these amateur down bars kind of coming in thinking, well, maybe if we have a little bit of kind of strength kind of come in there. We were starting to put in pullback to end of trend on the 500 tip bar chart, but then bang, that kind of came in there. That's falling through the ice, and it took us into this really kind of strong trending move on the way down. So that was my best trade of the day, short 56.50, which is kind of at the extreme of the range, but because we saw this first exhaustion pattern, it was getting in just as we had this exhaustion pattern, I knew we had to at least put in bullish divergence before it starts to slow that move down. So that was showing kind of strength of the selling. So I just picked out for it was 52.50. The thing ran to 42s or something like that. That's fine. I'm kind of happy with my numbers kind of getting out, but just look for that extremely high average trade size falling through supports on 3 time frames. That's falling through the ice, and then remember these little jaggedy patterns. Anyway, hope your trading's going well.